your say. We're on Twitter. Just use the hashtag that has appeared on the bottom of your screen. You can also email us your money at skynews.com.au. Let's get straight into it. Julia, 3 days of positive moves. It's either 1% down or 1% or so up. It's quite interesting.
3 sessions of gains, but I guess if we have a look at the session today, lots of news out and lots to absorb. However, volumes were quite light. In fact, this was the 6th consecutive session that we've seen for the Aussie share market. We've actually seen the value traded per day being under $4 billion. So extremely light, holiday-like volumes still going through the market. I think one of the biggest things during the Asian session was that we heard from China, and China may soon soften its stance on monetary policy. We did hear that Premier Li Keqiang came out to say that economic growth, there would be a floor under economic growth as well as employment targets. And that, of course, saw the Shanghai Composite absolutely soaring up almost 4% today, and other regions rising on the back of that, with the Korean market up by 2.7%. We also heard from the Bank of Japan, and the first time they've talked about recovery since 2011. They kept their asset buying program unchanged there, and the Bank of Korea staying unchanged on rates at 2.5% there. And of course here domestically, we just
on China, obviously a major one, as you say, the Shanghai Composite doing well. What would be the most likely course of action by the PBOC to maintain any sort of floor growth rate? Is it just another adjustment to the reserve ratio requirement, or could we see something else?
Well, I think the market is predicting or hoping for pro-GDP policies coming through, and that means stimulus. So stocks in China absolutely soaring, especially some of those financial stocks. And so all speculation at this stage, but it does follow a pretty woeful set of trade numbers which were out yesterday, both the export and import numbers falling and really surprising the market there. So the fact that we are hearing China talking about stimulus and pro-GDP strategies is good news for the market there. Of course, add into the mix, we also heard from Ben Bernanke. We saw the FOMC minutes overnight, and it's been a huge day in terms of information, especially for the Australian dollar. In fact, if we have a look at the Aussie dollar, an incredible day today, just having a look there. And you can see that we've actually gone above 93 US cents before pulling back a touch. And that was also on the back of some of the job numbers we saw out here locally. So all in all, a huge day, one of the best performers on the market. Gold stocks with gold prices jumping by 3%. And probably a good day to mention GOLD. It's the 10th anniversary of it being listed on the ASX, and that was up by 5.9% today. So good news for some of those gold bugs out there.
Julia, it's Martin. How are you?
Good. How are you doing, Mark?
Yeah, good, thanks. Look, just go back to China if we may, because it does seem that the market's still not sure on how the Chinese authorities are really juggling this reform process. So clearly they want to reform the financial markets, as well as really looking at getting a longer-term sustainable growth, albeit at a lower rate, along with making sure that there's in fact a floor to that growth rate. I mean, I think there's been a lot of commentary that the Chinese authorities do not want to see, their growth rate slip away to, 6 or 5%. How do you think that market's going to react to that?
There's a bit of a balancing act at the moment. I think China is being clear about its policy over the next decade, and that is aiming for an average of 7% growth over the next 10 years. And I think the market is anticipating that, but it wants to see a bit of a smoother ride and a smoother transition towards those type of growth rates. And if you're mentioning 5 to 6%, well, one of the things that the market really doesn't want to see is a hard landing in China. Of course, the recent numbers has really seen some volatility in terms of the market, especially in terms of the Chinese market, and that tells you a lot about confidence in China at the moment. If we have a look at the Shanghai Composite and just have a look at the share price, the price action in the Shanghai Composite over the past year, this is what it looks like. You can see that recently we did test that 2,000 point mark, but we've seen a pretty sharp bounce off that. However, it's not a pretty looking picture there. So all in all, if we have a look at China, I guess just looking to add in a bit of confidence, especially after that volatility that we've seen after that credit crunch or liquidity squeeze that we saw in China over June.